Hi Kush, good morning. Always nice to see you. Now, we were just discussing earnings. Two companies came out with their earnings yesterday, Axis Bank and Tech Mahindra. Now, I want to talk about Axis Bank first. It reported a healthy set of numbers, but what stood out for me was that loan growth was at the best in 7 years, whereas the company also saw NIMS, which is net interest margin, improve sequentially, whereas other banks reported a sharp decline. What is your assessment from Axis Bank's Q2 report card, and if you can give us an outlook on the stock as well?
Hi guys. First up, thank you for having me on the show. Always a pleasure. Well, I'll come in on this from a more technical perspective, as I always do. Well, see, one of the few stocks that we think from the private space is going to do well is actually Axis Bank. Look, HDFC's got troubles of its own. ICICI is lacking momentum, and Kotak again has not been a stock rank outperformer in any manner. So I think Axis Bank from the private space continues to remain our top picks. The fact that the numbers have been healthy was already sort of reflecting in the in the price, where you could see a relative outperformance in the stock. Now if I see the overall setup of the stock for the last, let's say, 6 to 8 months, ever since the March low that it made, the stock's actually been on an uptrend. The fall that we're seeing right now is more in terms of the overall selling that we are seeing in the banking space. But this for me is turning out to be a buying opportunity in Axis Bank. We think from the lows of about 920, 930, where it's a very strong support zone that the stock has. As long as that level is held, the stock could actually rally up to 1025 and even 1060 levels. So once the dust settles and once the market sort of starts to find its base, Axis will outperform from here, and it'll not be a bad idea to hold on to this one, especially if you have a positional view anywhere from 1 to 3 months. Axis does remain our topic from the private banking space.
That's the view from Kush on Axis. I mean, I'm looking at the stock also, Kush. It's the only stock in the Nifty banking pack that's in the green. The Nifty banking pack currently, as of 10:04, is down about 1%, whereas Axis Bank is up about 1%. So clearly, I think the outlook is bullish as far as Axis Bank goes. Amit, I think Tech Mahindra is another one which you want to discuss.
On the contrary, Tech Mahindra, Kush, posted very uninspiring results. The sharpest fall in net profits in 16 years, margins declining as much as they did. What are your views on that?
One word: avoid. And I'll give you a very simple reason. If you look at the entire IT space, if I have to sort of rank out the stocks, it'll be HCL, Tech, TCS and Infosys among the top names, and from the lower ones, it's the likes of Persistent, Bsoft, Coforge. So the likes of Wipro, Tech Mahindra don't really even fall under our purview, at least. And if you see that sort of again corroborated by the price movement, not just now. If you look at September onwards, when the stock made a 1300 high, ever since then we've seen a sharp fall without any meaningful kind of recovery. Today, after the numbers have come out, the stock's actually below its 200-day moving average, which has not happened since I think about early May. So I think the stock's actually very clearly in a downtrend. You could expect a technical rebound on this, which could take it to about 1000, 1150 kind of levels, but nothing meaningful. I wouldn't really buy into that dip or go bottom fishing or value hunting in this one. For me, Tech Mahindra is a very clear avoid.
All right. I mean, the stock is also not doing too well this morning. It's down about 3%, whereas the Nifty IT pack is also down about 1%. I think HCL is the only stock trading in the green, whereas all other constituent stocks are in the red, and Tech Mahindra is the worst hit, down about 2.7%. Now, Kush, also I want to get your view on the broader markets. I mean, in the last 1 month, we have seen Nifty, give away around 1100 points. At this time, we were also talking with the other guests that, this time around last month, we were talking about all-time high levels. Stocks were doing, were on such a good run-up. But this time around, the mood overall has kind of turned somber. What are you picking up? Is it a sell-on rise market, or does the, overall, after this correction that we have seen, is a bounce back expected?
So look, investing or trading, either of the activities are based actually on your time horizon. Now, just to put things in perspective, while you're spot on in the sense that the markets, Nifty and the broader markets included, have seen a very sharp fall, But let me just put it in context. We started the year when the mid-cap index was about 30,000, 31,000 odd, and ran up all the way to 41,000, which means it saw a jump of nearly 33%, and we're talking index jump of 33%, right? In a span of what 8 to 10 months. Now after that, the mid-cap index is now down to about 38,000 levels. We are seeing some correction about 10 to 15%, but that is perfectly in line. Despite the kind of recent downturn that we are seeing, even as of today, mid-cap index is seeing gains of 20% plus. And again, as I said, this is index. The stocks have actually been doing phenomenally well. So if your horizon is 6 to 12 months from here, I'm very sure that these dips will turn out to be buying opportunities. Of course, you have to be very stock specific. The same thing applies to Nifty, even Bank Nifty for that matter. See, if we look at it from a technical perspective, the index, Nifty, Bank Nifty both have gone into oversold territories where the RSI is now down below 30 for both the indices. PCR is below 0.7 for both of them. Why aren't we bouncing back despite these indices being on in oversold territories? Because you've seen massive call writing over the last 3 to 4 days, and today's the monthly expiry. So there's a bright chance that tomorrow, or perhaps in the coming week, once this expiry hangover is over, the index will rebound. So if your view is near term, wait for the expiry to get done. You might find a technical rebound on this stock, on index, on Nifty and Bank Nifty both. But that is not to say that the near term pain is over. But if your view is 6 to 12 months, then I think this is a good buying opportunity. You should look at buying, the stocks that you always wanted and thought were pricey. It applies to, mid caps and, Nifty, Bank Nifty stocks as well.
Now, interesting that you talk about mid caps because, whenever there's a bearish sentiment in the market, the broader markets are the first to lose. What's your overall take? Should we, keep on betting on mid caps and small caps? Because yesterday we did not see them declining as much as the headliners did. Although today they are, sharply down, I think about 1.5 to 2%. So what's your overall view here? Large caps or the broader markets?
So I would still pick mid caps. I know, because they were a little frothy, the inclination towards them was a little less, and that is quite right. But now, with the kind of correction that we are seeing in some of these names, they're becoming quite attractive from a price point perspective, at least. And if you put things in perspective, if someone was invested in the large cap names for the last year, maybe 2 years, the returns haven't been great, right? I mean, if I talk about the big boys, the Reliance, HDFCs, and Infosys of the world, they haven't even beaten the FD returns, if you see. So the pain from that perspective also is very real. I still bet on the India story, so I still bet on the mid cap story. It's just that there's the fall right now. You may not want to catch a falling knife, but once the dust settles, it's a good idea to again start participating in select mid cap names that have a strong business, that have a strong fundamental model going for them. So for me, mid caps will remain the theme. I'm just waiting for this fall to settle down.
Now, Kush, what I'm getting from you is that, perhaps over the next few weeks, at least, at least investors should look at sector-specific allocation, stock-specific approach. Where do you see value in this current market?
So a couple of places, that sort of are expected to do well. I know banking right now is down and out, and it seems like it's in the doldrums. But the entire financial space is something that I have on my radar. So a couple of NBFCs and a couple of stocks from the banking space are something that I will look for as a value buying opportunity. There is also the auto space, which was doing very well, has not really given way. And then thirdly, there is the real estate space. With the interest rate scenario sort of very close to peaks, certainly far away from the what you call the bottom, a bit closer to the top right now. The real estate pack also looks nice. So the three spaces that I have on my radar from a value picking or a buying perspective are the financials, as I said, the auto, and the real estate. Now the real estate pack is a little broad for me, where I'm including the likes of home improvement themes as well. So some of these names in this fall just become a little more attractive for me.
Hi Kush, Amit here. In the October correction that we are witnessing, alternative asset classes like crypto, gold, real estate are the ones who have done fairly well. Do you think it is time to move away from equities for the time being?
And also, should we allocate some of those funds to these alternatives? I mean, you were just talking about real estate, but gold, crypto, what's your overall view there?
Well, it might not be a popular view, but I'm not a very big fan of, crypto. So I wouldn't really comment on that. See, as far as gold goes, as far as real estate goes, being a SEBI registered investment advisor, I firmly believe in the fact that you should have a proper diversification in your portfolio. And from that perspective, they make sense. But let me just get down to a little, practical aspect. In India, if you see a lot of real estate investment, at least in the tier one, tier two cities, will come out of the profits or the money made in the equity markets. Once you've started investing in the equity markets, it'll just give you that fillip, that boost. So if the equity markets are performing well, that's when you will see the real estate market also doing well. If the equity markets aren't doing well, the real estate market will also perhaps struggle. Gold is a different animal altogether. You should always have gold in your portfolio from a safety perspective as an inflation hedge. That's never a doubt that you should have. And I mean, not as an ornament for your the ladies in the house. It's as a proper investment class. You should have gold even as biscuits or bars, and if you prefer that, or at least as an ETF, for sure. But real estate is something that for me is quite strongly linked to the equity markets. So I would rather play the real estate space via the equity markets. As I said, it could be the developers, it could be the financiers, or it could be the home improvement themes that I would bet on, rather than have an investment in a real estate property directly.
All right, that's the view coming from Kush Bohra. Kush, always a pleasure talking to you. Also, Amit, thank you for joining us in the studio.